This is a Power 98.7 podcast. Now we're talking. Subscribe to Power 98.7 podcasts in iTunes or wherever you get your podcasts. There's more on power987.co.za.
Power Solutions is proudly brought to you by Ndiso Consulting. Ndiso Consulting. Truth, trust, results.
It is that time for this feature with Ndiso Consulting in collaboration with Power 98.7, and here we talk solutions. This evening we are joined by Group Chief Advisor at Ndiso Consulting, that is Meelani Holeni. Good evening.
Good evening to Misang and good evening to the listeners.
An absolute pleasure for you to be joining us in studio because
Thank you so much.
What we are going to be unpacking over the next couple of minutes is it's interesting, but at the same time, there's a lot to unpack that can be confusing.
Absolutely.
Here we are talking about a solution that is based mainly on revenue for municipalities, how this revenue is then sourced as well as used within an organization. How does that then speak to any other organization?
Well, I think to open it up, revenue is the fuel that drives any organization. And for that matter, I also would say a non-profit organization and a for-profit organization and organizations that would operate based on either a surplus or whatever a deficit, which is acceptable. So those types of organizations require revenue or income, but we're talking money. Money has to roll in through the door. And therefore, such organizations as municipalities, state-owned entities, and we've spoken quite a bit about small businesses as well, will only survive if the revenue that they're generating exceeds their expenses. And that is where the success of any business can be hinged on.
Absolutely. And when we talk success as well as revenue, we must talk about a structure that should be in place. The architecture and the functions of an organization then come top of mind as that top tier structure. Let's unpack that model.
So there are organizations, clearly we're talking about municipalities as well and SOEs that are regulated. They are rooted within legislation and they have key policies that drive them. But equally, businesses, we must know, operate under a regulated or legislative environment because of the Companies Act and so on. But such is the structure of how a business should know how to operate within their legislated or regulated environment. Some environments are highly regulated. Some at least allow for leeway where they can operate and be able to reach the market much quicker. So municipalities are legislated and they have regulations and circulars that are published so often by the National Treasury. But we also understand that within that organization, that is the first tier. The second tier has to do with executive management. And that would be a team of leadership that would be accountable for driving that organization. We can talk about an accounting officer, which would be a municipal manager or it would be a city manager. But there must be someone who drives that organization. And the CEO in this case, if you compare it in the private sector, that is the accounting officer. So then again, we also look at the key functions of what that particular organization must achieve. There may be technical functions in some organizations, but there's certainly operations where they must do things, logistics, move goods, pipe water, switch on electricity, and so on. And the other side of it is that the core of it is that there's a customer in the center of all of
you
this.
And I.
And if that customer, who is myself, yourself, and everyone else, is not happy with what they are receiving, you will see it in the kind of revenue or at least how they pay you or how they don't pay you at all. And finally, the other layers is the support functions where we talk about the strategy. In the municipal sense, we talk of the IDP, we talk of the SDBIP, the Service Delivery Implementation Plan, we talk of the budget. And other organizations will have the same kind of planning that they have, what they are going to procure. There's marketing, there's finance, there's sales as well in some organizations. So the architecture of an organization and how they generate revenue is crucial because that speaks to an ecosystem, but it also speaks to a value chain that they must operate within. True. So that is how, at least when we talk revenue, it's not in the absence of a customer or the operations that must be taken into account or the technical side of things. So municipalities must pipe water. They must supply electricity. And for that, they charge a tariff of some sort, but they purchase it from somewhere. And that's how then you have an architecture that must be sound, and it must be well thought through, and must not have people who are not qualified to perform the roles that they should be performing.
I'm glad you mentioned that one because it speaks to governance. And here we've just unpacked the interlink of how credible it is to have a fully functional machine that is well oiled, because essentially at the end game is the customer engagement. If that is lacking, then revenue is not coming in. And if we are talking governance where that is lacking, and we've seen unfortunately in some of our municipalities and even SOEs and private organizations, that when this structure falls apart, then the entire business is basically doomed.
And there's a direct correlation between organizations that are run well, with excellent governance, with how they perform in general, whether it's service delivery or whether it's to open their books and look at how the AG would, for instance, pronounce an opinion after an audit. There's a direct correlation. Organizations that are dysfunctional tend to have poor revenue generating records. They tend to deliver services very poorly or scantily. They tend to have more protests, or they tend to have people who stay away from them and choose wherever. Unfortunately, with municipalities, if I am a City of Johannesburg resident, I am that resident. I unfortunately cannot move and go anywhere.
Right.
But what is it that municipalities must do to ensure that they become attractive? Because then it becomes an economic development issue where a municipality is attractive. They can attract investment. That investment is pumped into the city. It's buying land, it's building, it's creating jobs, and all of a sudden you have a municipality which is more vibrant. The revenue then shows from that point of view. So that those would be some of the ways that municipalities can survive that. There are also SOEs. You can take Eskom. If they don't generate electricity and there are blackouts, the same goes for them, and even private organizations. So governance is sacrosanct within organization because it drives and sets the tone for all the employees and everyone in the value chain to do their bit. And when everyone does their bit, it means that they are moving the machinery for service delivery, and revenue can then be generated with relative ease. Of course, there's a science to revenue, which we'll also talk about.
I want us to get into it because you've touched on it already, because you are talking about a value chain that then speaks to an attractiveness that is going to garner the support that you need and attract the generation of revenue. So let's go deeper into those levels of ensuring that you do generate revenue and you look attractive by simply having a system that is going to work.
Absolutely. So if we look at how, for instance, and there are various ways that revenue can be generated. You can provide services. You can be purchasing goods such as water or electricity and on supplying it at a margin. You can also be issuing fines, for instance, or penalties. Or you can be collecting money for licenses or leasing out land and various things that municipalities must do. So that is now the mechanics of it. But then if we come to what we've introduced as the revenue benchmarking report, which is the revenue maturity model. The revenue maturity model talks about if you want to generate revenue, or at least you want to be sustainable and you want to be mature, and that maturity means that you generate revenue efficiently, you're growing revenue month on month, you are able to sustain that revenue year on year, and you are able to diversify the sources that you obtain revenue from. So that means then if you go into the value chain of a municipality, to give an example, there's a valuation role. You must value the properties. You must make sure that you get the right values, because the right values of those properties on the whole determine your income for property rates. So that's one way that municipalities then generate income. You look at then installing a meter, which is for water or for electricity. That adds another a layer of revenue within there, which you'll charge for electricity, you'll supply water. There's also the collection of refuse. But with water as well, there's also the sanitation. But then there are other services that can then be provided. I want to improve my home or refurbish it. I go and consult an architect. They draw a very nice plan for me. I go and lodge it. I must pay fees there. And those fees become income for a municipality that keeps it going. And there are many other fees that can be generated within a municipality. So that value chain, if it starts to operate well from a valuation role to when you are metering or putting meters to measure the consumption for water and electricity, and the property rates, obviously they are fixed, to when you bill, and you don't forget to bill the property rates because it's always there, or you don't forget to bill the refuse. The entire value chain works well, because at the end you may go for debt collection, but you have not actually done the correct billing or carried out the correct billing. So the value chain is exactly that. It determines how you can be efficient, because then when you move on to the maturity, and which we talk about the maturity, the core of it is customer. Are you treating the customer well? Yeah. Are you having customer records? Are you having a CRM policy? Are your policies automated? Can they reach you well if maybe they want to query something? Are they able to touch you, feel you, or at least hear from you and get a response so that they can be able to react? So that's the first pillar, which we can talk about for a maturity model. The second pillar
Let's
is
just
around...
hang on the second pillar. We're going to continue with that second pillar. We just need to go pay our own bills. It's 7:21. A fascinating conversation that we are having with the Group Chief Advisor at Ndiso Consulting in the Power Solutions segment. That is Mielani Holeni right here on Power Business. Do not move an inch. We'll be back just after this short break.
Power Solutions is proudly brought to you by Ndiso Consulting. Ndiso Consulting. Truth, trust, results.
We pick up on our conversation in the Power Solutions segment with Ndiso Consulting, speaking to Mielani Holeni, Group Chief Advisor at Ndiso Consulting. We were talking about the revenue maturity when it comes to the sustainability of any organization and not just municipalities. And it brings me to another avenue of this particular report that speaks to a maturity score or level. How do we differentiate there? Because from the bottom to the top, it's quite interesting.
So let's talk about what makes up the revenue maturity model. Number one is the customer revenue pillar.
Yeah.
That's the first one, where we talk about the CRM, the customer relationship management, making sure that we have basic records about our customer, and also making sure we have the analytics that give us a sense of who that customer is, where are they based, if they are employed, and what is their payment track record. So that's knowing the customer. Banks call it KYC or FICA or whatever the case may be. And it extends even beyond that. So municipalities, or any business for that matter, must know their customer much more intimately, so that they can sell the right things, market the right things, and be able to at least send the right promotions to them so that they can be able to respond adequately. Secondly, there's about converting revenue, because here you have boxes of this and this product, you have water. What if no one at least consumes? So you need to at least when the consumption takes place, meter it properly, convert it, and make sure that it's complete. The issue is completeness of revenue, so that you don't miss even a kiloliter of water, because that's where
waste.
The issues
that's a leakage of money.
If there's a burst pipe, you respond quickly, you sort out the burst pipe, and you can save the water and sell it so that it's useful. The next one is around how do you administer your whole value chain? And administration is their processes, their policies, and is it automated, so that you don't have to deal with papers? Oh, we lost this paper.
And with COVID-19, we are digitizing.
And this is the digital world that we're living in.
Yeah.
And that administration goes with how you protect your revenue, because if you have automated records, you can always pick up from where you left off with a customer. There's efficiency. I can contact you online, I can lodge things online, I can pay you online, and it doesn't mean I have to walk into a municipality. That's the other aspect. The next one is we need to diversify the sources of revenue. It can't just be the big five: water, electricity, because next year the increase is now in COVID times. You can't increase at the level that you should.
Right.
So let's go find parking revenue. Let's go find outdoor advertising revenue. Let's go find leasing of land. Let's release land that we have for development, and that adds to the revenue streams. Lastly, is the analysis, the data. We collect so much data on people that we don't even realize. We collect so much information and interactions such that we can be able to build up patterns.
And target the client
directly. So we suffer sometimes in saying, but people in Soweto are not paying. Have we thought of how we can differentiate tariffs vis-a-vis another area so that those tariffs can be more palatable for them? Because a one-size-fits-all going forward is not going to work. So how do you differentiate tariffs such that you can be able to reach the customer and they would be able to afford that particular rate? So that's how we then score customers to say, if you look at where you are you a beggar? You know, when you're begging, it means, you know, you are operating at a deficit, you are waiting for grants. You'll take anything. And if you get nothing, sorry, you may not be able to pay employees. You may not be able to deliver services. Secondly, you can then be a snoozer who is missing out opportunities. If you take the emerging towns, Polokwane, Mbombela, Rustenburg, and all of those ones, there are so much opportunities there that you cannot afford to snooze. But some are taking those opportunities forward. The next one is municipalities that are hustling. Those are the ones that are going into the market, inviting people to come into. Are these the ones that we'd say
are diversifying?
They are starting to diversify. They are thinking very carefully about the assets they have. They even think of not only above ground assets, but they are thinking of underground assets, because you can run fiber underground. You can run water pipes underground. You can do a host of other things underground. And then there are ones that are called darlings. And these are the ones that have got 95% payment rates. They have got more than
I'm trying to think in South Africa. Well, maybe Western Cape.
Well, you know, the metros, I mean, most of them lend themselves into being darlings.
Yeah.
The emerging cities, your Polokwanes, your Rustenburgs and Mbombela and so on and so forth are emerging towns. Your other ones, such as, you know, your Naisnas, they are coming up in such a way that they are very strong. But where you want to be is you want superheroes. So those are 5 levels of municipalities, where you are at the lowest level, a beggar; the next level, you're a snoozer, you're a hustler, all the way up to there. And there are metrics that we have built behind here to be able to guide. So this is a diagnostic tool, by the way, that can tell you where you are. How can you move yourself to a point where you can become a superhero? And this is a guided process that would offer. And this is medicine that we take as well at Ndiso Consulting. It's something that we've
It's the apple a day.
It's an apple a day. So that's how we are trying as well to move ourselves forward from having started as an SME and moving into a business which is operating in a different segment.
Absolutely fascinating and insightful. I must thank you so much for imparting this knowledge with us. That is Mialani Holeni, Group Chief Advisor at Ndiso Consulting, in this week's Power Solutions in the Ndiso Consulting segment. I trust that you've learned as much as I have. Time, unfortunately, not on our side.
You've been listening to a Power 98.7 podcast. For more podcasts, visit power987.co.za or subscribe wherever you get your podcasts.